Ken Lin.
Morning.
Co-founder, CEO of Credit Karma. Excited to dive right into the conversation. You guys have gotten really big. Valuation, $4 billion right now. Giving people insight into, so much of their financial lives. But a big part of what you do is centered on data. And data has had a big year in a lot of different ways, especially when it comes to people realizing, boy, I'm showing a lot of my data maybe to people I didn't realize I was showing it to. I know you guys don't sell data, but has this Facebook Cambridge Analytica controversy and the focus on data changed either the way you're approaching what you do or the way you're communicating about what you do?
Yeah, I think from an approach perspective, it hasn't changed much. I mean, I always call it the Reddit test, right? So the way that you describe your policy, if it was on the front page of Reddit, which tend to be the more cynical, but also more tech-savvy people on the internet, how would they react to it? And we've always tried to build a business that we could pass that test. So from an approach perspective, we haven't done anything different. I think from a communication perspective, actually saying the things that we believe in more and more, I think has become more important, right? Because it gives context to the things that we do. We've always known that we've done right by the consumer, but I think we actually have to make it a lot more explicit in light of the conversations. And if you don't paint that narrative or you don't tell that story, it's easy for somebody else to paint that narrative for you. And I think we've certainly spent some time talking about how we think about data and why it's important. And from a business model perspective, I push back or rally against this idea that data in this context or data as a product online is bad. I mean, Credit Karma is here to help consumers make the right financial services decisions, and you actually need data to drive that. And I think that it's actually part and parcel with our success. We've needed the data to give people real insights into how they think about. We see about $4 trillion worth of debt on our platform. Well, if I don't know anything about you, I can't really tell you anything that is fundamentally different than what you would read in a long-form content, what you would see on television. But if I know a lot about you, I can actually tailor the message, tailor the experience, and use all of our data, all of our machine learning algorithms to actually help consumers get into a better place. So I think in many ways, it's historically painted as a bad thing about the internet, but I would disagree. I think data is actually a powerful driver making innovation go forward, particularly in financial services.
Let's back up for a second. Credit Karma, I mean, you guys are one of those not so overnight successes in the sense that you've been around for more than a decade at this point. Started out giving people access to their credit scores, making recommendations for financial services that could perhaps save them money through that. But you've expanded quite a bit. You moved into tax a couple years ago. You've also got some other things going around being able to check, do fraud checks, things like that. Talk about the different pieces that you're adding on to that core original mission around the credit score and where you're headed with that.
Sure. So, the original business started with giving away free credit scores in 2008 in an environment where free credit scores didn't really exist. From there, we've moved into a number of areas, whether that's credit monitoring. We have a free tax product, as you mentioned. Last year, after the Equifax breach, we actually fast-tracked a lot of our dark web scans. We have.
How many tax returns this year?
I don't think we've actually disclosed that number.
I know, that's right.
I don't have a final count quite yet.
All right.
We have we actually bought a company called Penny to actually help facilitate conversations. And where all of these pieces go is that if you take a look at consumer finance, and I would say fintech specifically, there have been fantastic innovations in the payment side. I would say that from a consumer problem side, there's still a long way to go, right? We have Google Maps that have mapped every street corner in basically the world. We can pick up our phone and talk and have a video conversation with anybody in the world. But from a consumer perspective, there are still real problems. 86% of subprime applications are declined. 16% of super prime credit applications are declined.
Super prime?
Yeah, so the very best credit. And the reason is...
Why are they declined?
Well, the reason is...
Why are we declined?
Well, the reason is, more machine learning, more difficult algorithms, more data is being used. And there's just no way that an individual consumer can understand what is going on in the credit decision. One, They tend to be all very proprietary. So every lending institution believes their underwriting model is the best, is the secret sauce that will get them to be the next $200 billion company. That's fine. We have no judgment in that. But that's very frustrating for the end consumer who says, well, I want to know what the best products are for me. I can't track 2,000 underwriting models that have 2,000 variables. But that's where a platform can. And that's where Credit Karma is going, which is we think about, well, in the future, we should be able to solve these problems. The same way that we have autonomous vehicles, right, gets me from here to downtown New York, we should have autonomous finance, right? Helps me think about the time that I'm 18 to the time I'm 70, whether that is the right credit card, the right mortgage, the right 401k. Those things really matter, and it's a very objective type of thing, meaning that this is an art. There is clearly a lowest cost loan in the market for me. I just need to have the wealth of data, the underwriting knowledge, my specific information to know whether or not I qualify for that. And this is a perfect example of where technology, machine learning, big data can solve these problems.
You introduced tax a couple of years ago, and it gives you insight into a customer's financial picture beyond what credit does. You get insight into income, so many more data points that help you. What has been harder about tax than you anticipated? And are you going to change your model at all? Because it seems like if you're going to add all of the help features that your customers are asking for in tax, I mean, eventually people might have to pay something, right?
No, I mean, we have a philosophy, right? I think the hard thing to do is actually to make a great service for free. And we challenge the team each and every day to do that, right? I think the easy thing is, well, let's just have the freemium model. Let's go after the high margin aspect of having people pay. And I like this challenge, and I think it's one of the hallmarks of Credit Karma. We spend a lot of time thinking about where are the areas that we can disrupt. We ask every one of our product managers, every one of the people who are thinking about these ideas, to put it on the lens of helping consumers, particularly, I mean, you have to think about where we serve. So Credit Karma, we have a little bit more than 80 million members. 1 in 2 millennials are on our platform. But by and large, this is a platform built for a country where half of Americans don't have $400 in savings for an emergency.
Right.
So charging $100 for tax preparation, for example, regardless of the monetization or the margins of that, we just think it's, or the data specifically, we just think it's the right thing to do. So in regards to tax, I mean, I think the hardest thing is, it's not too different than when we were in credit scores 10 years ago, which is differentiating, making a brand. I mean, everyone is on television talking about how their tax preparation software is free. Mm-hmm. Well, the reality is it's free if it's a 1040 Easy or 1040A. If you do estate tiling, there's an upcharge and there's another upcharge. And this is an environment where, our competitors are spending $200 million, $200+ million on just television each and every year. We spend a fraction of that. So I think that's been an interesting piece. But going back to your what's changing, we don't think anything's changing. We think this is the right thing to do. And to your point, it adds a lot of wealth. It makes the recommendations, it makes the underwriting easier. Part of the reason why super prime people get declined is that they are credit qualified, but their asset or cash flow not qualified, right? Mm-hmm. So when you have that information, you can get to a situation where you can solve the problem for that particular 16% of the consumer base. And when you look at it across the whole consumer base, having enough information on the consumer's financial profile really helps you make the right diagnosis.
You're getting awfully close to $1 billion in annual revenue. Is that going to happen this year or next year?
Asking a lot of tough questions. It will happen soon. Let's leave it that way.
Well, what's soon?
Next few years, yeah.
I'll
leave it ambiguous.
All right.
I'm going to take advantage of the fact that we are a private company and not disclose these things.
Speaking of which, you raised $500 million about 3 months ago, I believe, at a $4 billion valuation. Looking into it, it's got a $55 billion valuation, roughly. Do you view Intuit as sort of a competitor, maybe the old guard for what you're doing? They do a lot of things that you do. You look at Mint and how they try to link people up with credit card. Are you disrupting their model, mainly?
You know, we get the who are your competitors questions a lot, and
Nobody has any competitors.
Yeah, I know. I'm going to give you that Shane McDuck stick. But if you look at it, I mean, I think it is fundamentally different. I mean, I think there are people who give free credit score products, you know, who charge money. There are banks who give free credit score products. I don't know if there's anyone who does everything we do, and you know, I guess our playbook is not to follow anybody else's playbook, right? We think about the things that build trust. I think for us to succeed, and our vision in this space is, you know, there should be a company that is the trusted independent advisor from a financial services perspective. I would argue that's not a bank, right? Because they tend to show you all the products that they have, and that's great and fine. And many of them are good, but at the end of the day, we think about it, if you can build that platform that, you know, it's like going to your doctor for your health, right? But if you have that same equivalence from a financial services perspective, we think that is powerful. And I think our competitors, you know, have looked at it from different places, and they look at it slightly differently than we do. So it might be a freemium model, it might be a pure pricing model, but they're all different product lines. And we think about, well, anything that affects your financial health, let's have our product team and us think about a way to provide the very best service at a free, compelling rate. And let's then make sure that that data actually goes and furthers this idea of, with that, we will make you more successful. It's a very simple concept. I think it has a virtuous flywheel. And I think the last piece is it's all about trust. And we've been doing this for 11 years. We have you know, never, I do not believe, betrayed the trust of our membership base. We think it's a hard thing to do. It's you know, an important thing to do. And I think that's how you get there. Because if you look at the data, you know, millennials are more likely to trust the Google. I think, you know, we saw the slide yesterday. If you believe that trust is a function of where they're investing, millennials are now believing more and trust more in technology companies than they do financial services companies. And I think that's a paradigm shift. I think my parents' generation would say the most trustworthy companies are the large financial services institutions. But given the things that we've seen at the various banks, you know, I think that that trust has been eroded, and technology is where it's coming into the fold. And I think more and more consumers will be looking for, you know, whether it's our platform or some other platform to help them with their financial lives.
There's an increasingly muddy line between what's a consumer and what's a small business, right? The gig economy has helped to do that. Are you going to be serving small businesses?
So we maybe one day, and I hedge a little bit just because.
But not soon.
No, because we think that, you know, everyone is a consumer, not everyone is a small business owner, although to your point, that might change over time. And I actually think that it's hard to do a lot of things very well. We've seen that as, you know, we're a company of 800 people. It's just hard to be in everything, and we want to make sure that we are building the best products that we can. I think a lot of times, if you're a small business company or, you know, or direct to consumer or B2B, you really muddy the waters. It's hard to get the message across in terms of what you really do. And I think what we try to do is already complicated. It's, you know, a lot more than a 30-second soundbite historically.
Consumers still, despite services like Credit Karma, are pretty confused about the basics of finance. You guys have done some studies recently into even how people look at the credit score. What are you finding about what people still need to understand about the basics of their financial lives?
Yeah. I mean, I think you have to get a couple of points. You know, one is I think most of us don't care about our finances in a meaningful way, right? We care about the spending side, we care about the retirement. I actually don't think we care so much about the intricacies of it. And we see this. So for example, 80% of consumers, when they look for an auto loan, don't shop, right? They're thinking about, how do I drive off the lot with the Mustang? They don't necessarily think about the implications of their credit score and the underwriting, what the difference of a 9% interest rate is going to be versus a 19 interest rate, and more importantly, the implications of that when they're 65 years old and thinking about retirement and the money that they could have saved, you know, if they went for that 19% or that 9% loan. And I think that's the reality of the world, and it's actually very confusing, right? I mean, it's complex. So it's not because we're ignorant or we're dumb, it's more of the fact that, well, the complexity makes us want to ignore it. And our point of view, and you know, what we've learned is that anytime we actually, you need to give consumers a basic set of knowledge, right? And I think there are people who want to engage, they want to learn, they want to be entertained. But I don't think they want the technical aspect of how does the credit score work, or how, you know, the tax filing and all the intricacies of it, right? I mean, that's why, you know, the tax products, the way you see them today, aren't about like filling out categories or boxes. It's an interview question because it's more digestible, right?
Right.
So, you know, our observation in the space is that you know, 80% of users just want general sense of how this impacts their lives, and then they want it automated, right? They want the recommendation. They want the show me what to do next. We see it. I mean, when we look at the way that people, let's just say, compare credit cards, you know, you could look at 200 products, but the majority of people say what's 1, 2, and 3. They want to check the box to see 1, 2, 3 are brands that they know that the rates are within the areas that they believe are right, and then they move forward. And I think more and more that's going to be the way of the future, particularly in finance, because the products are getting more complicated, the underwriting is getting more complicated. So I think, again, this is where technology comes in and solves a problem in a meaningful way, where you know, you don't really have to spend that much time because, again, it's a very objective function. You know what the lowest interest rate is. Now, you might not like that company, you might not like that brand, you might think their customer service is terrible, but that is objectively, you know, solvable as well.
What do you think the role of content is going forward for the fintech industry? You know, some of your competitors, you know, nerd wallets, et cetera, have a content focus. LinkedIn, in a different industry, but also data focused, has put a focus on content to drive engagement and sort of education around the career space. Do there need to be more investments in quality content to help people understand the value of what the industry is offering? Or is it more about interface and not so much about content?
Yeah, I mean, I think there's a place for content. I think it's here to stay. I think there's a segment of people, I would argue it's actually the 20 and not the 80, right? So there are 20% of people who really want to do the deep dives into understanding every nuance. But I think the majority of consumers actually want the custom and the more digestible pieces. So case in point, you know, if you look at content as you will, and we'll just keep it to credit scores. I mean, if you look at every long-form content article around credit scores, they're actually relatively the same. And I would argue that's actually not a good outcome because all of them tell you to pay your bills on time. They tell you not to apply for too much credit. They tell you to have different types of credit. Well, I would argue that, you know, the true optimization is different for everyone in this room. And when you have content in the traditional form, that's what you get, right? You get the lowest common denominator of action items. And I think that's what you see in finance, and I think that's what you see in consumer technologies right now, or fintech. And I think you actually need, you know, we talk a lot about data and how it can be bad. I would argue this is where data is good, right? The more of this data you have, the more I can give you a custom recommendation. I mean, it's kind of like going to your doctor. Knowing your health history makes your doctor a lot better at being able to prescribe the right medicines and understand the right treatments. I think finance is just as critical. If we don't know anything about you, you know, your financial advisor can't help you plan for retirement if they don't know your income and how you're saving, and that's where we really want to come in and make a difference.
Well, we're going to play a little game as we get close to the close here. Overrated, underrated.
Okay.
You remember it from yesterday. So I got a few things I want to run by you. You just tell me if it's overrated or underrated. Artificial intelligence.
Underrated.
Underrated, all right. IPOs.
Overrated.
Oh, come on. Into it.
I know there's some of them here.
This is taking longer than I expected.
Yeah, no, they're underrated. How about that?
Oh, okay.
Yeah, they're doing great. They're doing good things.
Cryptocurrencies.
Overrated.
The Consumer Financial Protection Bureau.
Did somebody really put that on the list?
I put that on the list.
I'll say underrated. I think we have short histories. We have short memories. I mean, it was only 10 years ago that we had a financial collapse, and I'd hate to see that happen again.
It's amazing how quickly we forget about financial collapses. Of course, we will continue to track you. Soon, you will hit $1 billion in revenue, in annual revenue.
Yes.
Maybe this year, maybe next year?
Soon.
Soon. All right. Ken, I appreciate it. This has been great. Thanks for sitting down. And as